Welcome to the Winner's Playbook. Every winner needs a game plan, and this one's for you.
Welcome back to the Winner's Playbook. Josh here with Carlo. So I don't have my usual partner in crime, Billy. I've actually got Carlo joining the podcast today, who is one of the mortgage brokers here at �00𝗚𝗏. And today we're going to be diving into a topic that can be uncomfortable, but seriously is important. And that's how to talk to your parents about money, estate planning, and what happens as they get older. This isn't about being morbid. It's more about making sure your family's protected, prepared, and not scrambling when life throws a curveball. We'll walk through how to bring it up, what you actually need to ask, and how to keep the peace while doing it. So, Carlo, before we dive into that topic, mate, welcome to the Winner's Playbook. And what's the latest on your own, mate, in the mortgage world? Any good news on interest rates or just anything positive you can tell us?
Yeah, thanks, Josh, and thank you for having me. It's nice to have the roles reversed. I think I had you on one of our podcasts not that long ago, so
yep,
happy to join your podcast. But look, things are going really well on the mortgage side of things, and obviously off the back of a couple of rate cuts, RBA rate cuts, has definitely spurred on a little bit more market activity, which is great. And I think it's been done in a nice measured way as well, where people aren't going crazy as well. So I think if we get another one, I think a lot of people are obviously expecting one this month that's just been now, but that didn't exactly happen, which didn't actually surprise me, to be absolutely honest with you, Josh. But I think next month they're expecting it to pretty much come through, which will continue to spur on the market and give people a little bit more options. First home buyers coming to the market as well will definitely help them out, give them a little bit more borrowing capacity. So
yeah,
apart from that, everything else is travelling along quite nicely. So yeah.
Yeah, I haven't actually read the RBA notes following the decision yet. So what was the rationale behind it? Because all the banks, everyone had actually, the market had picked an interest rate cut. So what did they come out as the rationale around this one?
Yeah, the main reason for them not going ahead with another rate cut is purely off the back of what's happening globally.
Sure.
With all the tariff issues still lingering in the background, that hasn't disappeared, and it's probably not going to disappear anytime soon. So I think from as far as the data went from, here locally in Australia, all great. Everything's tracking along quite nicely. We've got inflation under control, all that side of things. But it was just more around the uncertainty. And I think they felt that if they pulled the trigger again too soon, whilst there is this level of uncertainty, it could backfire on them. And I think the RBA is very cautious about going too hard too soon or making comments because it backfired on them once before during COVID. So I think they've been bitten by that one.
Yeah, exactly. And I thought I seen during the week as well, was there something that did APRA come out with regards to the buffer that correct, and that's left unchanged? It hasn't been changed, the servicing buffer that banks have to apply. Can you just like briefly unpack what that was?
Yeah, so many, I'm trying to think of when they exactly introduced it, but APRA obviously imposes a 3% buffer when banks go to do their servicing on loans. And that was purely based on when rates were really super low. When we're talking in the low twos or whatever, to have a 3% buffer built on it, it was to allow for any potential interest rate rises. And I remember in those days, people were like going, there's no way in the world they could rise that high again. And sure enough, they have, and probably surpass that as well. So when rates did get to their peak, a lot of the banks and a lot of the industry bodies were calling for APRA to revisit that and say, okay, maybe 3% is too much now, because that took the serviceability rate up to around, the 8s and 9 level. So I thought that was probably a little bit too high. But APRA being APRA turned around and said, well, no, we think that's probably still a good measured approach to take, and we're going to leave it at the 3% mark. So once again, whatever the actual interest rate is, banks will always assess it at 3% above that potential, that actual rate itself. So
Yeah, and I think that's a good point to highlight, because a lot of people probably don't actually realize that. They might look at the loan repayments on their loan and go, well, I've got no issues of making this, but the banks are actually assessing it at a higher rate, which probably a lot of people don't actually realize is happening behind the scenes. But I know we're not on this podcast just to talk mortgages, of course. And I've just got back from Singapore as well, so I had a couple of weeks over there, which was fun. Absolutely love the climate, and then back down here in Melbourne in 15 degrees max. We're probably working with.
Welcome back.
At the moment it's awesome, but a lot of good things going on. And I will mention as well, we're going to have a real revamp of the podcast, both the Winner's Playbook and the finance podcast, a little bit later in the year, because we're going to be in our new office, and we're actually going to have a proper legitimate podcast layout as well, and a nice sound system booth set up as well. So we're going to have a bit of an upgrade to the podcast at the back end of the year, but we'll leave that for the time being, and we might dive into the topic that we're going to be talking about. So, talking about money, where does it go? How do you talk about this with your parents? And maybe, Carlo, this is obviously quite a good one for you because, you've got some older parents, plus you've got some younger kids getting a bit older as well. So it's probably no better guest to bring on the podcast to unpack this one. If we start to begin in terms of why do you think it is harder for adult kids to bring up money, or death, or, what happens with their parents? What's been your experience there?
Yeah, I think it just comes down to just the raising of the topic itself about someone passing away. Yeah. It's probably been a little bit taboo with most families itself. So, I think that's always been the biggest issue, is that if people start talking about death, regardless of whether the intentions are correct or not, it seemed like, okay, why are we talking about this? Is there something going on that we need to be aware of, or and sometimes people come across maybe the wrong way as well. Because you don't want to be coming across as that you're just doing it because you're worried about the money that you might get down the track as well. So I think it's probably more so just purely because it's an emotional thing really at the end of the day. It's like, in your field, Josh, when you're talking about life insurance and all the different levels of risk insurance, it's a difficult conversation to have because you're really talking about the worst case. So I think that's probably why a lot of people don't have the conversation, because I think people just get turned away by it all and get too emotional about it as well. So,
yeah, no, I think you're spot on there. It's obviously an uncomfortable topic, and unfortunately, I actually have seen people before, really talking of what they're going to inherit, like they're really proud of it, and they're like, it sounds like they can't wait till their parents actually pass on. Like, I've unfortunately seen that a few times, and I just never have resonated with that thought process. Well, I'm not in a position where I'm going to have really anything passed on from that perspective to me, but it's just, it's never resonated. And I even have told some clients before that, that you could think that you're going to inherit a lot of money, but don't forget, your parents could experience a lot of health issues. A lot of things could go wrong. They could go into aged care. All of these things could start happening down the line. And then you had your eyes looking at millions of dollars of assets and property or shares and cash or whatever it may be. That could quite easily dwindle away to minimal to none. And what do you don't want to be of the thought of, you don't want your parents to live out the best part of their last part of their life because you're thinking of them spending your future inheritance. Like, I think that's pretty grim if someone takes upon that view. And I think that's a recipe for disaster for anyone to take that position, because if you're relying upon that and then maybe you're a bit more relaxed in your own life because you're like, look, I've got this coming. God, I feel like that could really turn around and bite you on the butt with that sort of a mentality. It's pretty dangerous. Have you seen that before in experience?
Yeah.
Or
unfortunately, I have. I've seen people who have got themselves into a lot of debt purely because they're banking on the fact that they're going to inherit a whole heap of money or whatever it might be down the track. And I just sit there and go, you got to be kidding me. If you're literally planning your life or your assets and liabilities purely around your parents passing away, which is a crazy thought, because like you said, things can change very quickly. I always say to my parents all the time, you're going on your ski holiday. My parents don't ski, but what they didn't understand was ski meant spending their kids' inheritance. So I always say, go for it. Like, why not?
That's good.
You want to live out the rest of your life in a nice way too, not sit there and go. And I've seen the other side of it where parents haven't lived life to the fullest because they're worried about how much they're going to leave behind to their kids and their grandchildren. It's like, that's just as crazy as well, because no one should be really living life banking on whatever they're going to get from parents or grandparents. So but definitely seen it before, and it's not a nice thing to hear personally. So
no, that's good perspective. And I haven't heard the term ski before. That's a good one. Yeah. I'm gonna have to keep that.
I love it.
That's a good one. I'm gonna have to use that. Yeah, for sure. And what about?
I kept my parents guessing for about half an hour, and they're going, "Oh, we don't even like
well,
the snow."
I didn't know either. I thought they were skiing, so I didn't actually know what they were doing. What about the other way though? Because we're talking from the perspective of the kids bringing it up with the parents. Do you feel like who do you think that should be more on the shoulders of? Like, who has more of the responsibility there? Is it like the adult kids or kids, or is it more of shouldn't the parents maybe take more of the initiative in that? And I can talk from personal experience of, again, situations I've seen where, you know, the parents a bit more older school, and then they just take the view that, look, they don't need to sort any of this stuff out because the kids will figure it out themselves, and it's all good. You know, family's good. You've got a tight family, and yeah, we're you know, they'll be right and they'll figure it out amongst themselves. And again, it's pretty dangerous operating in that sort of a fashion. But what do you reckon? Who do you think it's sort of an equal burden there to share, or someone should?
That's exactly where I'm going to go with. I think it's the responsibility really does lie with both sides. Now, obviously, experience will probably tell us that the parents probably won't want to bring it up because, once again, it's not a nice topic to be bringing up with your kids, and probably they'll be thinking, "Am I scaring my kids off that there's something actually wrong?" But so I think, it takes both sides to probably talk about it. Who raises it? It's probably no right or wrong answer when it comes to that. I think this day and age, it's probably going to be the kids are going to be raising it more so. Because we've got access to a whole wealth of information as well. We're probably thinking a little bit more longer term, whereas our parents are probably just sitting there going, well, you know, we just want to enjoy the rest of our lives and that's it, and try and be as healthy as we possibly can. So it's probably more up to the kids or the adult kids anyway, to raise the conversation more so than anything else.
Yeah, no, I agree. And what if we move on to like the key things families need to sort out early when it comes to wills, aged care, and estate planning? And obviously noting, like, this isn't all necessarily stuff that you're going to be talking about with your clients as a mortgage broker, of course. But what comes to mind on that side of things, Carlo?
Yeah, obviously the will is going to be number one in all that, and that's standard with most people, regardless of you're old or you're not. You know, a will is obviously a big part of everyone's life and should get that sorted out. But I think probably the biggest ones would be around enduring powers of attorney, medical directives and stuff like that, because, like we said, things can change very quickly, and it's quite often too late if nothing is actually in place. So that's probably, you know, I know myself, I'd probably need to have that conversation with my parents as well, that if something happens to them, who's got the power of attorney to make any important decisions. So I think that's probably the big thing that a lot of people probably don't think about too much. You know, wills is always mentioned. And look, and if you go to a good solicitor anyway, or someone who deals in wills, they should typically bring that up with you anyway. I know probably in your role too, Josh, you're encouraging people to do the same thing.
Yeah, no, like the amount of people I see that don't have wills is astonishing. And look, you know, if we talk about having a will, you know, a 20-year-old who's just finished uni probably doesn't actually need to have a will in place if they've got no wealth whatsoever behind them. But then, you know, as you start building up your wealth, you know, family, kids come along, you buy your first home, you start, you know, building up some assets. That's where the will comes into play. But I would say, you know, probably 70-80% of people I see don't have wills in place. It's quite astonishing to see. And if we talk about a will, you know, average cost might be $500 to $1,000. If it's more complicated, it's going to cost you more money if you've got trusts and businesses and a lot of other assets. But it's, you know, it's generally something you only do a few times throughout your life. Like, you might even be able to do it once and it just covers you forever, just depending upon your situation. But yeah, it's definitely better having than not, because that's really what dictates what you want to occur in the event of you passing away. And going back to that scenario I was saying before, where the parents are like, no, the kids will figure it out amongst themselves. Like, you know, when you're not around, you don't know what's going to occur. If there's a bit of money that's flowing around in the estate as well, you know, who's going to try and say, no, I get more? And then I think the biggest part there is you're trying to prevent, you know, future family breakdowns and conflict is one of the biggest parts. Because of course you're not here, so it doesn't really bother you. But probably the last thing I think you want is for your family to sort of fall apart post you not being here anymore. So I think, the wills, the powers of attorney, as you touched on, and with that will is just make sure it's, you know, structured, aligned to your wishes. Because if you don't have a will, it's like, well, how do you determine how things will be distributed? And another point there is probably talking about like estate assets and non-estate assets. So typically, well, a non-estate asset being, say, superannuation is one. So like, you've got all your property and shares and all of those bits and pieces usually going to be caught up in your will. But a lot of people don't realize that super isn't caught up in the will unless you nominate it basically to be in your superannuation fund as well. And all of these things are, again, kind of just, you do it once, make sure it's nominated all all correctly. And if you want your super to be paid to your will, you can do that. You just got to nominate it correctly, and then it will fall part ultimately of the estate. And then once it's done, you keep it tidied, tucked away in a drawer. Usually your lawyer will hold on to a copy of it as well, and make it known to the people that are, of course, your powers of attorney, because they would have had to sign off on everything. And at that point in time, you're pretty set. And then it's just a matter of, if there are significant changes, well, then it might warrant a bit of a revision of some of what that estate plan actually looks like. But I think the key thing there is actually planning, because taxes, and if you don't structure these things correctly, it can actually cost not necessarily you, but your beneficiaries, or who gets the money, a lot in the long run. Like, have you ever had clients before, Carlo, that you've seen with testamentary trusts, or trust where parents or someone's passed away and some assets have gone in there on behalf of the kids? Have you come across that before in your world?
A few times, not a huge amount. So yeah, you can see the situations where people have properly prepared for this type of life event versus those who haven't prepared for it. So you're right, just having all that nice and watertight is super. And the other thing I would mention as well is, and I've got my parents to do this, and also my in-laws have done it off their own back as well, was letting the kids know about what bank accounts they've got, or if they've got direct shares. More so the bank accounts, because if something happens and funeral costs need to be paid for and all that, you need to sort of know where money is actually parked. If the kids have got the ability to pay for themselves and then just recoup those funds post the divvying up of the estate, then that's fine. But it's always good to have a bit of an understanding as to what our parents actually do have. It's not just about property and other types of assets. It's liquid assets like your cash and et cetera. So even superannuation as well. A lot of people may not even know about half the stuff that's sitting there. So
yeah, it's funny you say that point. I got off a review with the client earlier today, and unfortunately a father had passed away, and was chatting with my client, and he didn't know his dad had like 3 or 4 different super funds, and now he's trying to get the money out of all of them, and it is an administrative nightmare. So he's trying to track them all down. And I'm trying to think if I'd actually mentioned this on the podcast before, but like what I've got in my place, like I've got wills, all that's then taken care of, but I've gone a step further, and I call it like a little black book in case anything ever went wrong. Every quarter I update it, and I send it to my wife, Alana, password protected and everything, because it's got virtually all of the information of our stuff. Just kind of saying, all right, this is what we've got. This is where it is. These are the accounts. So because I think this is actually a good thing, just even between couples of, sometimes in a relationship, one person generally takes the lead in the finances, and someone usually takes a back seat, or is more support. And then therefore, sometimes all the party, hubby and wife, they're not actually fully across what everyone's got. So particularly, business owners, or if you start having multiple entities sort of flowing around the place, I was like, geez, how would Alana figure this out if I was not here? I don't know if she would figure it out. So I've put in together, these are all our assets, these are all of our debts, these are our bank accounts, these are our insurance policies. This is the accountant, these are the entities that we've got. And I even then put a little note of, this is what I suggest you would do if something went to go wrong, and go see a financial advisor at Link Wealth Group. So that's all in there and sorted. But look, yes, it's something like that, I think goes a long way, because it can be tough if I've seen it with some elderly clients where partner passes away and they don't have access to accounts, like can't pay things, which it's tough.
Yeah, and then like everyone's situation is completely different, and as you can imagine, as you would know, as a business owner, your financial affairs are a lot more complex. So, and like you said, I've seen lots of people where husband and wife operate separate bank accounts, which is fine. I'm not saying there's anything wrong with that, but they weren't aware of what the other person's got in their accounts, a whole range of things. And I've spoken to whether it be a husband or a wife, and said, do you know about this? And then they're like, no, I have no idea about that. Didn't even know we had that, or whatever it might be. And you sit back and go, maybe I'm a little bit different. Maybe I'm a little bit more old school, where my wife and I, we know absolutely everything about each other and what we've got. We operate joint accounts. So there's no, we're always across where we're at any point in time as well. So I think that's probably one of the tougher ones we do face from time to time.
Yeah, no, and I'm on the same page. Like I'm always for full transparency with clients, and I say, look, I see a lot of clients where they don't actually have accounts together and they count money separately. I suppose that's
Mm.
more if you're newer to their relationship, but I do see some clients that have been together for quite some time and they still run separate accounts. Not it's never how I've ever done it, but I suppose it's really each to their own.
Yeah.
What about having how do you start the conversation without sounding like you're after money? So I don't know. What about your kids, Carlo? How old are your kids again? How old are they for the podcast?
Oh, I've got to remember this now. So my son's about to
Yeah.
turn 22
Yeah.
and my daughter's 24. So, and my daughter's entering a different stage of life now where she gets married in March next year.
Awesome.
She already has her own family home with her partner. So, I guess how you, and I've always thought about this in terms of how do you actually raise the conversation with your parents without, like you said, without sounding too greedy or like you're just money hungry or whatever it might be.
Mhm.
And I think you probably almost need to flip it a little bit in terms of, trying to teach them a little bit as well in terms of how things need to be sorted out. So, and you almost need to go as well, like what's the worst case? And if you can highlight to them as to some of the stories that we've heard about how things can get really messy. I've seen where families end up in mediation or in some cases in court. Because unfortunately, when it comes to money, people can get really greedy, and all of a sudden, even though you're family, it doesn't really matter. So, it's all about making sure, if you want your legacy to be that your kids are well looked after, I think you almost need to tell them, but you also want one of those legacies to be that your kids have got, are able to deal with everything really easily once you're gone and not have any arguments because no one knows, maybe one person got told and the other person didn't get told. So it's about having that transparency with your kids earlier on in terms of what you got. Because at the end of the day, they can't get anything until you disappear one day. So, but I think if you can have a lot more transparency with your kids, and that you have to wait till they get to an age where they understand it, they appreciate it, and they understand why you're actually raising the topic as well.
Yeah, I think they're great points. And I think the other part that I would add to that is, if, either side are having problems trying to figure this thing out, this is where it can actually help you have a third party or someone impartial. Like this is sometimes a role as an advisor. What we have to do is where we get, the family in together. And I did have a more complex situation not too long ago where their hubby and wife retired, got a pretty substantial amount of assets, over $10 million. So quite a lot of assets, but then there was quite a lot of kids as well, I will say, from different marriages, and it was quite a complex piece whereby we were then going to be looking to have conversation, then getting everyone in together so everyone's aware of where things are at, what's happening, and some early inheritances were going to start to happen at that point in time, and sometimes that is where you just get a third party to actually mediate it, and that could be an advisor, it could be a lawyer, it could probably be nearly anyone in a way, as long as they've got some experience in how to deal with it. But that can, I think, could probably be helpful in some situations where there are a bit more complex matters, which I would add. But I think we might have already touched on as well, like what can go wrong if these things are left too late or really never discussed. Really, like taxes, pain can sort of blow the family apart, which are the last things that you want. Is there anything that you reckon we missed off there? Or
probably just rushing into decisions that you want to make sure whatever decisions you're making for your parents, whether they're here or they're gone, is more of an educated, well-informed, correct decision that you're making, rather than, oh crap, we've just been forced in this situation, we don't know what's going on, so let's just do this for just to get it out of the way. And all of a sudden, once you've made that decision, if it's the wrong one, it's typically going to be a few things, probably costly, very hard to unwind, could have longer term tax implications, whatever it might be. So, I think it's more around just rushing things too quickly at the end if you haven't got everything sorted out.
Yeah, it's a good point, that. And that's the thing, like you weigh up the costs of just getting some actual advice around this, and what assets. Like I forget the stat I seen the other day of how many Australians are millionaires being, got net assets over $1 million. And that's predominantly because Australia is heavy property based.
Yeah.
So many people in Australia are classified as, as millionaires. But, the cost of that asset base of at least over $1 million relative to just getting some advice around this stuff, like it doesn't even compare. Like look, I won't lie, getting wills and powers of attorney done though, it's not actually that easy because you do need a few people signing documents off, and you got to go through the process, print it, get it all witnessed and things like that. But it's not something you have to do often, and it's just something that you're just better off getting than, of course, not, as we said. But I think we covered off quite a lot of it, Carlo. What do you think? One practical step people can take this week to open the door up to this conversation. What do you think that would be?
Yeah, I think one of the probably one good thing to do is get people to watch our podcast so they can understand the whys behind it all.
Too true.
Yeah. And if it's not watching this podcast, it might be just you come across an article that's quite relevant as well. I know my parents, my in-laws, they'd love to read stuff as well. So I think if you can put something in front of them and say, came across this, you don't have to say that you've been planning this all along, but it could be just like, I saw this article, have a read of it, let me know what you think. Maybe this is something we need to have a bit more of a talk about, and just open up the communication that way. So, because, you're just going to be really careful as to how you word it, that you weren't scheming this all along or anything like that. So it's just making sure that, hey, let's talk about it. Let's just open up the conversation more. So, and I think it's good if you, especially when there's multiple children as well, that everyone's on the same page. I think that's one of the big things, is when you don't have the children on the same page, and everyone's has their own ulterior motives or whatever it might be. If you can get the kids together in one, the adult kids in the room together at one time and go, hey, mum and dad, we really think we need to be having a conversation about this. Not saying this is going to happen tomorrow, could happen 20 years down the track, but at least have the conversation so we're all on the same page, we're all in agreement. Because the last thing I'm sure you would want the day that you pass is having your kids argue with each other. I've seen it way too many times. It's not a pleasant sight either. So, and you sit back and go, why are you doing this? You're not going to bring your parents back now. So, this stuff could have been easily sorted out early on in the piece.
Yeah, Carl, I think you nailed it there. Like, I think that's a great way of actually being able to raise it, is just share an article or share something, or it could even be something, in the news of just, a celebrity or someone passed away, and just going like, hey, mum or dad, like, what would actually happen if that was the case? Like, do we have an actual plan in place? I reckon that by far is probably the best way you could do it. For sure. So I think that's actually a good way to wrap it up and close it out, Carlos. It's been a good one. But of course, these chats, they might feel awkward, but they can save your family a lot of pain, stress, and confusion later on. So as we've been talking about, would suggest to start small, stay respectful, and don't put it off until it is too late. And if the episode gave you a few ideas or the courage to bring it up, hit follow, leave a review, and share it with someone who's in the same boat. And before we finish up, Carlo, do you want to give us the big plug for the finance podcast? Where can everyone listen to the finance podcast? And of course, your partner in crime, Eddie's off around the world at the moment, gone back to his homeland in Lebanon. So you're manning the ship in Link Finance. But where can everyone find you guys?
Yeah, so similar to the Winners Playbook podcast, available on Spotify, on YouTube as well. It's called The Brokers Lounge. I think if you just type in Link Wealth under the search function, it'll come up with both of our podcasts. And encourage everyone to have a listen and have a watch. So I know my parents do. They always keep me up to date and which ones they've watched. So yeah.
No, that's awesome, Carl. I really appreciate being on the Winners Playbook, mate, and look forward to getting you on again.
Thanks for having me, Josh. Really appreciate it.
Disclaimer. The information contained in this podcast is general in nature and does not take into account your personal situation. Please head to the show notes if you wish to book a free 15-minute call to discuss your personal situation.